So the next exercise is to complete the cash flow statement. Keep in mind, just like with the deferred tax liability exercise, we start the cash flow statement with the GAAP-based net income. So this was 30 across the board. And on the next slide, you're going to see that we start with that GAAP-based net income, and we try to make adjustments to get to cash from operations. Just like in the last exercise, trying to just conceptually understand what's going on in terms of cash coming into my pocket, all you have to do is look at the tax balance sheet, or the tax income statement. You see that for the first year, $42 million is going into my pocket. The next year, 30 and 18. So we know that the end result is going to be 42, 30, 18. And just the question is, what adjustments need to get made? So this is a very similar exercise to the prior exercise. Give this a shot, hit the pause button, and then when you're ready, hit unpause, and we'll go through it together as a group. Okay, let's go ahead and complete this. So we started with $30 in net income. The first add back has to do with deferred revenue or unearned revenue. Let's write that out. Unearned rev. And if you recall from the prior slide that we had $20 million worth of unearned revenue in the first year. So the deferred revenue or unearned revenue liability went up from 0 to 20. And so that increase is reflected as an add back. The next year, if you recall, there was no change in that liability. And the following year, the liability was fully reversed. So that's the first adjustment. And this is part of cash from operations. And the second adjustment, of course, is the change in DTA. And we know that the change in the deferred tax asset in the first year was created, and the amount was 8, and it was an asset. So the asset going up by 8 is going to be reflected as an adjustment down by 8. The next year there was no change from one year to the next in DTAs, and then in the last year the deferred tax asset was reversed. It went from 8 to 0, and so this is reflected the opposite way on cash from operations. And just like we had expected, we knew what the answer was going in. We were trying to get to an answer of 42 in the first year, 30 in the next year, and then we got to 18 in the final year. So we knew what the answer was going to be all along, and we just had to figure out how GAAP wants you to present the adjustments to get from accounting net income to cash from operations.